Hey investors, welcome all of you to Stoxpot, where we break down the latest business, industrial, and economic information. It's me, Lekshman M J. Today we will dive into what's driving the surge in coconut prices and how businesses like Campus Activewear, Cello World, and Cera Sanitaryware are performing. But before we get started, please be clear that this is not an investment advice. I talk only about what's happening in the business, what factors influence growth or decline, and what future could look like. So having said this, let's get started with a major price shock in the market. Coconut prices have soared to a 7-year high, jumping 38.7% in January. Green coconut prices are also up by 14.4%. Thus, inflation is hitting the coconut-based products hard. As a result, coconut oil inflation has skyrocketed by 54%, while copra inflation is up by 20.8%. Not just coconut. Fruit inflation has hit a decade high of 12.2%, with pineapple prices up by 23.6% and grapes rising by 16.1%. So having said this, now let's see what's driving this massive surge in coconut prices. There are several key factors behind this. Let's see them one by one. First up, exports are booming, with desiccated coconut shipment jumping 300% and crude coconut oil exports doubled. Then there is a shifting consumer preference. Coconut oil is gaining traction as a healthier option and as an alternative to palm oil, especially while Europe is tightening deforestation rules. Next, social media trends. This also played a role pushing demand for coconut-based products. Plus, the festival season in South India ramped up the demand in January. On the supply side, Tamil Nadu faced the supply shocks, which further pushed the prices up. And don't forget the policy changes as well. The higher import duty on competing oils like sunflower and soybean is pushing more people towards coconut oil. Added to that, the next factor is a weaker rupee, which makes importing exotic fruits more expensive, leading to higher fruit inflation overall. Now let's switch gears and talk about Campus Activewear Limited, India's largest sports and athleisure footwear brand. The company delivered a strong quarter with revenue growing 9.1% year-on-year, driven by an aggressive distribution push and higher online sales. Sales volume shot up 10% year-on-year. Also, the company expanded into North, Central and West India, while also making strides in the southern market. New product launches have also played a big role in diversifying its portfolio. This brand also ramped up its marketing game, which further boosted its visibility. On the financial side, though the gross margin dipped slightly due to raw material price inflation, the company's EBITDA margin expanded by 440 basis points thanks to better cost control and working capital management, due to which the net profit surged 86.7% year-on-year. Looking ahead, the Campus Activewear is making big moves, with one of its new manufacturing plant being operational now and another one set to start production in March 2025. They are also pushing deeper into southern region with strong e-commerce strategy. They are also focusing to scale up in quick commerce and premium large format stores. Data-driven strategy will also help them track consumer trends, optimize pricing, and stay ahead in the competitive landscape. Finally, with focus on market share, margins, and omni-channel expansion, Campus Activewear looks ready for a strong future. Next up, let's talk about Cello World Limited, a major player in India's consumer wear market, covering houseware, writing instruments, furniture, and glassware. The company faced a tough quarter as discretionary spending remained weak. The festive season gave a temporary boost, but demand cooled off towards the end of the quarter. Despite slower revenue growth, strong operational efficiencies kept EBITDA margin at a solid 26.3%. Looking ahead, Cello World expects a demand revival, especially in hydration and back-to-school categories. They are doubling down on production innovation, brand building, and expanding distribution network to strengthen their market position. Now, moving on to our final one in the list, Cera Sanitaryware Limited, a leader in sanitaryware, faucetware, tiles and wellness products. The company faced macroeconomic challenges and a subdued demand environment in this quarter. While market headwinds hurt overall performance, the B2B segment gained momentum, partially offsetting the retail slowdown. Looking ahead, the company expects the consumer sentiment to improve, driven by the new budget measures, which could boost discretionary spendings. Plus, higher infrastructure investment should drive demand for sanitary ware. They are also making a big push into the luxury segment alongside focusing on exclusive stores and enhanced product displays. Despite short-term hurdles, Cera is positioning itself for long-term growth by leveraging its strength and capitalizing on demand recovery. And that's a wrap on today's episode of Stoxpot. We covered topics like massive surge in coconut prices, the strong performance of Campus Activewear, market moves of Cello World and Cera Sanitaryware. It's been an eventful quarter across different industries, and as always, staying informed is key to understanding market trends. And remember, this podcast is for business insights only, and no investment advice is here. And if you find this episode useful, don't forget to follow us and share it with your friends. So until next time, it's Lekshman M J signing out.